Hello and good afternoon from our end of the world, or good morning or evening, depending on where you are. Welcome to our webinar today, focusing on keys to unlocking solar capital in Latin America. We're very excited to be bringing this webinar to you. Latin America is a very important region for Solarplaza or for renewables in general. We're very excited to be going into depth with some great speakers. So without further ado, I would just like to give a short introduction and go straight into our first speakers and into our topics. So quickly to give you an overview of what we'll be discussing as part of this webinar, I'd like to start with a short introduction. So my name is Borja Gutierrez. I'm a senior project manager and team leader with the emerging markets and financing team at Solarplaza. And yeah, I'll just give a short introduction of the topics we'll be discussing today, and yeah, giving some background information. And after that, we'll be having our first speaker for the webinar, which is Mr. John Padilla, who's Managing Director of IP Latin America. I'll give a short introduction to him shortly. And Elizabeth Robberechts, which is a lead investment officer with the Inter-American Investment Corporation. And they'll be sort of discussing some of the major sort of keys to unlocking solar capital for the region, diving into specifically some of the interesting markets, and of course we'll have an opportunity to have a question and answer session with both speakers at the end of the webinar. Just very quickly on our organization, Solarplaza, for those of you that don't know us, we are an organization that's based in the Netherlands, organizing, specifically focusing on providing a platform for engaging solar PV professionals. And our team specifically, we're working on emerging markets and finance-focused events. One of which I will describe shortly is coming up in Latin America, or two events that we have focusing on Latin America, which I'll shortly introduce. But we have an extensive track record of organizing events in over 25 plus countries around the world, with a very strong network of PV-focused solar professionals, including investors and several types of stakeholders. And yeah, we're looking forward to having a very exciting 2017. Just to give you some more relevant track record for those of you focusing on Latin America and specifically on this topic of bankability, financing of solar projects. You see on this slide just a few examples of some of the events that we've organized in Latin America, where we have been focusing for several years and see a lot of ongoing incredible opportunities, and therefore continue to focus on the region. And also specifically with regards to our line of conferences, Unlocking Solar Capital, we increasingly see a mismatch between sort of investors, financiers on the one hand, and bankable projects on the other. And we aim to, through these conferences, really connect the right types of stakeholders to push solar project development in the emerging market region. So we already organized an event in Kenya earlier last year now already. I'm still thinking in 2016. And we'll be organizing an event in Miami in June, as well as later in the year another in Singapore focusing on Asia. So just to give you a sense of some upcoming events, perhaps for those of you that are focused on Latin America, the two events that I'd really like to highlight that we have upcoming are El Futuro Solar Argentina, which is a conference and one-day workshop that will be organized in Buenos Aires. You see the website there, elfuturosolar.com. It's our second edition of an event in Argentina, a market that we're incredibly bullish about and focused on, and we look forward to having already several confirmed speakers, including high-level government officials, and exploring the opportunities in both the utility scale as well as distributed generation segments in the country. And obviously, from the 15th to 16th of June in Miami, we'll be organizing Unlocking Solar Capital LATAM, which will focus on the entire region. And this webinar is sort of organized as a preparation towards that conference in exploring some of these key topics. And we will in fact have several other webinars on these topics, and specifically for the LATAM conference, we'll be going more into depth on specific segments. But just to give you an understanding of this event in Miami, I mean, we as I mentioned, we'll be bringing together, a wide range of stakeholders, a good balance of both, on the one hand, investors and financiers, and on the other, project developers, IPPs, and those that are doing projects, as well as industry facilitators. And yeah, we basically look to have over 200 participants. We're already working hard on establishing the program, and we'll be releasing an updated version of the program later this week. And also, yeah, are very excited about an event taking place in Miami, the financial hub for the region, and bringing together stakeholders from some of the key markets. So we'll keep you informed about that event. Just some questions or some practical notes that you can rely on. So as I mentioned, we would really like to make this an interactive webinar. We have a few poll questions that I'll be asking in a minute. But also throughout the webinar, we very much encourage you to ask questions. So obviously, if there's technical issues, you can use the chat box, but you'll notice that there's a questions box as well in the app. If you see on the right side of your screen, it should be the menu for the app. You see a questions box. We highly encourage you to ask questions, which we'll then direct towards our speakers. And we very much look forward to moving forward. So we will start with our first speaker, John Padilla. He's a managing director of IPD Latin America. He's been directly involved in the company's expansion into Mexico, Colombia, Peru, and they're working on a number of key markets in the region. He has extensive Wall Street experience, working in the energy and infrastructure financing industry for over 10 years. A good friend of Solarplaza. We've worked with him on several occasions. And before I go into his presentation and hand over to him, I would like to start, as I mentioned, we'd like to make this an interactive webinar. So I'd like to start with the first poll question. So we'd like to ask all of you to basically answer a question just to get an understanding of what markets you're most focused on. We'd love to, you can answer now, specifically for 2017, what markets are you really focusing on? Obviously, you see 5 options here. So there's, Latin America is a huge region. Obviously, some of the other markets aren't there, and clearly there's a lot of other interest as we see the numbers growing, and I'll share the results in a second. But we will have a second poll question later on, sort of covering some of those other markets. But I think this is really interesting to get a sense of what markets are people following, and there's a lot of opportunities, and these first 4 are just some of the key markets we've identified with a lot of potential, but clearly there's a lot of other opportunities. So yeah, I'm just going to give it another 10 seconds before we to let some of those last votes come in, and then I'll share those results with you. But it's quite interesting indeed. Okay, perfect. So thanks very much for voting. Let me just share those results with you. You should now be able to see the results on your screen. So interesting. It's very easy. We're very evenly distributed. Sort of focus on these different markets. So we definitely see a lot of interest there, and indeed other markets are attracting a lot of attention. So we're curious to see what some of those other markets are, and so these as well as some others will be explored throughout this webinar. So yeah, without further ado, I would like to introduce you to our first speaker, John Padilla. So yeah, I'd like to hand over the floor to you. John, are you with us?
I am.
Perfect. So John, I'm making you presenter, so you should be able now to shortly.
Here we go.
Perfect. Yes, we see
your
your
screen.
screen.
Can you see my screen?
Please go ahead. Yes. Thanks very much.
Okay, fantastic. All right. Good morning to everyone, or good afternoon. Happy to join all of you this morning, or today, let's call it, and going to just jump right into some of the things that we're seeing. I want to start out with really a look at some of the regional dynamics, and then really step away and take a look at some of the financing realities that we're starting to see across the board. So as a starting point, what I wanted to do was just take a look at some of the auctions that we've seen in Latin America, and there's really been kind of a two-tier world. So we've seen some incredibly world-class competitive prices in both Chile and Mexico, both for wind and for solar. And then we've seen really a difference with countries such as Brazil, which is certainly it has an impact in terms of folks funding in reais and just the inflation and the economic issues that are taking place. And so some of the macro country risk issues I think are quite prevalent here. There's other issues in terms of regulatory framework as well as just the size of the market. So kind of in that other basket, you see certainly Central America. We just saw the results from El Salvador here at the beginning of this month, and on one end, they certainly were able to allocate the amount of megawatts that they were trying to bid out. What we've seen in general terms, though, over the last 3+ years has been just an incredible drop in solar prices in particular. So we've included both some subsidized pricing, and then you saw with Mexico's average 2016 prices just an incredible move, downwards. And this is going to have implications not just for the region, but certainly globally as well, as I think a lot of countries start to consider and consider auctions, and that includes Europe, and now we'll see, and I'll talk a little bit about the U.S. and what that potentially implies. But some of the lowest prices that we've seen here, both in Chile and Mexico on the far right-hand side of the graph, are quite compelling, and then some prices there in Dubai that are also down at those same levels. So really, there's a lot of questions that continue to kind of percolate in the marketplace as to how sustainable those prices are, and I think financing factors in quite extensively into that discussion, and so it's quite important to take a look at that in conjunction. What we've done here is just put together a couple of spider graphs. I think that these are always provocative. People have different views on each one of these elements, but this is, I think, a very helpful and useful tool to kind of stimulate discussion, and it also forms the kind of opinions and strategies that companies kind of go through in terms of their own internal processes when they're taking a look at opportunity sets around the board. And so if we just take a look at the left-hand side, we're taking a look at regulatory issues. So in general terms, regulation has come along quite a bit over the last couple of years in Latin America, perhaps with the exception of Colombia, which continues to still not have dedicated legislation that's been implemented for renewables. So it's a little bit in limbo. Infrastructure continues to be an issue, and topics such as transmission lines, et cetera, are one thing that continue to hold back different countries in the region. And then I think one that's going to play a much bigger role as we move forward is really the political and economic stability in countries. So there's a number of countries that their credit ratings are under pressure and likely to see some downgradings here over the next year or two, and that's going to have an impact on the attractiveness of certain markets. There's the auction structures again on the right-hand graph. In the case of Colombia, that's still not in place. So that's a major issue. And then local currency plays a very big role and has a big impact. So the local markets, such as Mexico and Chile, and it's very clear why they've been able to attract the kind of low prices, in part because they do have access to local financing. And in the case of Mexico, for instance, what we saw in the second auction is that there was actually a disadvantage to bid in dollars. You were penalized, and as a result, every winning bid that was there came in Mexican pesos. Kind of scanning out a little bit, what we see on the left-hand side here in terms of GDP growth is that you've got, and we typically take a look at the largest markets, and in our view, that includes these 6 countries here. And what we see is that Chile, Colombia, Mexico, and Peru have all outstripped GDP growth compared to OECD countries. But the issue, really is inflation. So when you factor inflation in, that really kind of offsets certain opportunities or certain attractiveness. And then in the case of Argentina and Brazil, you see that they've, by and large, trailed in terms of GDP growth, and then also their inflation has been extremely high. And it's exactly why you see the kind of results that you see, amongst other things, the other factors that are compounding the higher levels that you see in terms of the auctions, at least. Taking a look at the investment in the sector, so we took a look at this over the last 5 years, and what you see a clear trend of, and what I'm sure most people on the call are quite familiar with, is just the increasing focus on solar. And so that, I think, is really proven out quite intensively on this graph. And then when we take a look at it kind of from a global perspective, this gets quite interesting. And we can see that Latin America tends to be a market that, at least through 2015, was kind of bumping along. 2016 was a much better year. But the question is it really going to kind of break out in the way that folks are interested in seeing? The other aspect is that Europe has been shrinking, right? So China has taken a big piece of that, and Asia, which excludes China and India, have also increased quite significantly. I wanted to use this slide as kind of a jumping off spot to then really take a look at a couple of things. So one is politics, and the other aspect is financing. So we just inaugurated our 45th president here in the United States, and with it there's certainly a lot of uncertainty and a lot of concern that's taking place in the marketplace overall. And I think that there's a few things that are worth talking about. So on this graph, what you see is what we've plotted on the right-hand side is the percentage that the U.S. investment makes up. So it's come down over the years of the Obama administration, but it's roughly about 15% of total investment. And so there's a lot of questions out there as to whether how the U.S. Change in policies may impact investments in the U.S. And I think one of the first questions out there is with respect to subsidies and whether subsidies will be eliminated. And that will be complicated because there's a lot of decisions that are taken at a state level. And I mean, we've seen states, such as California, that have, emphatically said that they're going to, continue with their policies in terms of clean energy going forward. But this is all very much in motion, and I think just something that people that are either involved in the U.S. market or not have to kind of keep a close eye on. It then raises the question of whether, if subsidies are eliminated, whether you'll end up with stranded assets, and will that then create kind of a more competitive market, and will you start to see prices that reach the kind of levels that we've seen in some of these recent auctions, particularly in Chile and Mexico. In general terms, I think it just generates a tremendous amount of market volatility. The expectation is that the U.S. will pull out of its climate change commitments, and then the question is what will be the kind of impact? I think climate change is something that has been taken on a global level, and so for the first time, it's not a situation where if the U.S. pulls out, the party's over. But there will be some changes that will have a very significant impact, and I think those are all yet to be seen. The other aspect that I would mention is with respect to trade, because trade is an item that President Trump has focused on quite intensively. And so, U.S. imports of cheap Chinese materials and finished products could be curtailed, and that could absolutely have an impact on those items being imported to the U.S. or imported to the U.S. for further movement into Latin America. When we then turn to the financing side, the first thing that I would mention is that interest rates are going up, and so that's irrespective of the U.S. administration. The Fed is definitely looking to move in that direction, and that's just going to raise the cost of capital across the board, and not just in the U.S. What we're also seeing is that in terms of funding sources, venture capital and to some extent, to a good level of extent, private capital as sources of funding are eroding, just simply because the low returns and the time horizon that it's taken for some of these investments to materialize. The other aspect that I think is worth mentioning is that yieldcos like SunEdison had put on the table have died, and so that's eliminating another source of capital. So what are the sources of capital kind of going forward? I think pension funds become an interesting area that we'll be looking at. And then when we take a look at commercial debt, we're seeing that it's available, but it's with shorter tenors and a lot more restrictions. So it's becoming much more choosy. So bonds are certainly available for bigger projects and bundling, and I think we'll see that kind of going forward. And it just is going to place a lot more pressure on corporate financing, corporate funding, which implies kind of market consolidation. And so with that in mind, when we take a look at this next slide here, what we wanted to take a look at was just the M&A activity that took place in 2016, and we were seeing some billion-dollar transactions, which are pretty significant, and we're also seeing just much larger energy companies move into the mix, which I think is a very interesting dynamic. And it's in areas where they think that they can actually achieve cost savings and or expansion of market with profitable margins. So everything from offshore wind farms to batteries to the major acquisition of and merger between Tesla and New York City. So the takeaways, I think, is that the higher financing costs will drive and accelerate, market consolidation. What has driven prices down has been the technology advancements. But if financing costs and return expectations are not being achieved, that dynamic, I think, starts to really be put into jeopardy. And there's a lot of companies that have been looking, globally for first entry opportunities, and those opportunities in more attractive markets, whether it be size and or legal framework, et cetera, are just waning. So then the question is are you entering into auctions, or are you able to actually sign a private PPA? The issue in what we've seen, for instance, in Mexico, is that private PPAs have really been kind of pushed to the side, in the sense that large industrials say, well, now we have a reference price. There's the auctions. Meet that. If you can meet that, then we'll sign a contract. There's always exceptions, but I think just in general terms, those are things to keep in mind. The other thing is that as you move into, or as companies are forced to move into the auction kind of environment, or their opportunity sets are more constrained, how much of their more attractive asset class can really kind of support the razor thin margins that they've been generating through auctions, et cetera. So, and then the last item I think is quite critical, in the sense that you have few companies with highly robust balance sheets, and I think going forward, that's going to be a major factor in what we see. So just to kind of wrap up and to reiterate a few things, I mean, I think the big four takeaways that I would put on the table here is that, again, financing costs are going up, and the sources of funding are just becoming narrower. It's not to say that there's not several sources. It's just it's becoming more of a picky environment. President Trump will certainly impact renewables. The question is just to what extent, and how does the market kind of evolve, with or without U.S. cooperation in terms of clean energy. And what that means, I think, for Latin America is that if there will be, some fierce competition in the more attractive markets, and those countries are going to just have to really double down in terms of continuing to create the contractual flexibility that investors are looking for, in terms of terms and conditions that they see in OECD and other more established markets, regulatory improvements, and then the infrastructure that I mentioned at the onset. And just as a wrap up, I would say that the market is certainly ripe for consolidation, and I think we'll see a lot bigger transactions and more of them as we move forward. And with that, I will end my comments. Thank you very much.
Thanks so much, John. Really interesting insight. You talked, you touched upon some pretty interesting topics. I mean, you went from sort of starting with pricing, and you discussed some of the general trends, and yeah, basically what I'd like to do as well, also to get a bit of a sense, and we will go, and we have some questions coming in. Again, I would like to encourage everyone to keep sending your questions through the questions tab. But also, in order to sort of get a sense of how, you maybe actually, John, could you go back to one of those first slides, the one with the pricing, for, I think it was your very first slide, maybe even just after your opening slide. Yeah, exactly. I mean, this is a pretty interesting example of some of the pricing that has been reached in some of those key markets that we're looking at in LATAM. And I wanted to get a sense of, as a poll question, and it is, a very subjective question, but generally, what do people consider a sort of, reasonable average price level? And I know this is a difficult question, and a lot of people are probably asking, well, do you mean utility scale? Do you mean, I mean, of course, this is a very sort of wide range, but just to get a bit of a sense of where, how far do people think that this sort of race to the bottom will go, specifically in Latin America? Trying to take into consideration. But yeah, I'm curious, and we see quite a lot of votes coming in. I'll share those results in a second. But I'm curious, and my question to you in a minute, John, will be, what you consider. I don't want to ask you yet because I don't want you to influence the poll decision, but I would, I'm very curious to see your take on this. And again, it's a very subjective question. Okay, interesting. So we see a lot of, I'm just going to close out in maybe 10 seconds. I see that there's still some votes coming in. Interesting results. Okay, I think most people have voted now, so I will share. So yeah, these are the results that we see, and basically most people lie somewhere between this sort of range between sort of 30 to 70 US dollars per megawatt hour. So that's what we see. So indeed, we don't think, and that was one of the things we're seeing, is sort of race to the bottom, and we have seen in Chile already, I think, below $30 per megawatt hour. But yeah, so John, what is your take on this? Where would you think is a sort of reasonable average price level for PV in the region? Not sure if you're still with us, John. We don't hear you right now.
I'm sorry.
Yeah, I hear you.
Yeah, I had it on mute. No, I think the first comment that I would make is that, you know, not all markets are equal. And that was one of the, you know, comments that I tried to, you know, convey on this slide is that you're really seeing the impact of, you know, access to financing. You're seeing the, you know, robustness of the local market, regulatory issues, you know, et cetera. And so all of those factors, you know, really matter, and you have to treat each one of these markets, you know, quite individually, and you can't lump them together. So it's really kind of apples and oranges. I think if we just, as an example, to try to answer the question, you know, look at Mexico and Chile, you know, there's still items to improve in terms of the infrastructure, in terms of the contractual structure, et cetera. But if we use those as kind of proxies, I mean, I think if you're in the, you know, $40 you know, kind of range, 40, 45, which is not too dissimilar if we go back, you know, some years and take a look at IPP pricing. It's just where, you know, returns are going to be much more kind of reasonable and robust. There's always, you know, exceptions. I mean, when you take a look at the Atacama in Chile, obviously you've got some of the best world-class, you know, solar there. So there are exceptions, but I think in general terms, that's the range that I would I think we'll settle out eventually at.
Yeah, thanks for that. No, I think you raised some very interesting points indeed. I think right to begin with, it was a sort of unfair question because obviously, like you said, and I think that's one of the points also that needs to be highlighted is indeed there's a lot of specificities by market, by segment, and indeed the same conditions don't necessarily apply. One of the things that you said also during your presentation, which I found personally quite interesting, was with regards to sort of your thoughts on how the private PPA sort of movement could be slowed down due to the fact that, you know, private off-takers see some of these prices in the big utility scale plants and sort of expect people to meet that. So indeed, no, some really interesting topics. So thank you very much, John. Please do stay with us. We're going to have some more Q&A at the end, and there's, so for those of you that have been asking questions, please, I encourage you to continue doing so. We have these. We'll bring some of these questions back so that we can also discuss some of these with Elizabeth. So again, thanks very much for your time, John. We'll get back to you shortly. And now, basically we'd like to sort of move on with our next presentation before we start getting into some more depth on these markets. So basically, our next speaker, Elizabeth Robberechts, as I mentioned before, is lead investment officer with the Inter-American Investment Corporation's Infrastructure and Energy Division. She has been working extensively on financing for probably utility scale renewable energy projects in Latin America and the Caribbean, and has vast experience, especially with regard to other technologies as well, but with PV solar specifically. So luckily she's here to join us today, and she'll be also going into depth on some of those specific markets that were mentioned before, but also one of the things that came out of this last question was of course we mentioned the sort of specificities of each market, and so Elizabeth will go into a bit more depth on that. So Elizabeth, are you with us?
I am. Thank you.
Excellent. Thanks so much. I'll control the slides from here, so feel free to let me know. Thank you.
Okay, great. Yes, I'm not able to connect to the webinar, so Borja, I appreciate if you could advance the slides. Thank you, everyone. It's really a pleasure to be part of the webinar. I just wanted to basically divide the discussion into two topics on this sort of agenda slide, the second slide, talking a little bit about IIC, giving a little background of who we are and what we do and our focus on renewable energy, and then discuss our view of the bankability issues for certain key solar markets in Latin America. And these are the markets I've selected. Obviously, other markets can be discussed, but these are the markets where we've been seeing the most activity: Chile, Brazil, Argentina, Mexico, and in Central America. So in the next slide, just to give you a brief introduction to IIC, we are a member of the IDB group. Last year, IDB did a reorganization of its private sector lending and consolidated everything into the IIC. IDB is the largest multilateral lender for Latin America and the Caribbean, and IIC, as you can see from the numbers here, has a significant portfolio in the region of outstanding loans, projects, and the numbers summarize our impact. In the next slide, you can see our sort of organization. We focus on financial institutions, infrastructure, and corporates. We do impact renewable energy, I think, from all three of these windows, but most directly through infrastructure projects. That's the area where I work. We do a lot of renewable energy, wind, solar, geothermal, biomass in a number of countries. So we are very, very actively supporting renewable energy and climate change investments in our region as demanded by our member countries. And in the next slide, the summary of our financial products shows you how we're doing that with loans, with guarantees, and with equity. These are what we can offer. I think most typically we target renewable energy projects with loans and guarantees. And this gives you an idea of the types of products we can offer. I'll talk more specifically about how these products are used in specific structures in examples in the slides coming up. But I included the next slide on partnerships just to give you an idea of something else that we bring to the table, which is access to these donor funds. A number of donors channel their funds through IIC to take advantage of our policies and our environmental and social standards so that we can basically, when there's a technological risk or a cost barrier for a particular project or a particular country, we can bring these funds, and sometimes they can take additional risks, or they can be concessional in terms of their pricing and help projects get done. So just to give you an idea of what we can bring to the table. Starting with our country analysis, Chile is the first slide that I included. I think the tremendous change we've seen in Chile over the past 4 or 5 years has been really, really interesting. I actually moved to Chile in 2012 and was right in the middle of it, and it was really remarkable the number of developers coming to Chile based on the regulatory framework, the high prices, the exceptional solar resource, and huge amounts of solar have been built and financed, and some of it with PPAs and some of it on a merchant basis. And so I think right now we're in a period where the market's changed a bit. The main driver, when you look at bankability drivers, it's still PPAs. Banks want to see PPAs. Market prices, as we've been discussing, are very, very low, and it's difficult to make merchant projects work. Location is important. Transmission constraints have been a real factor for projects. We're seeing a number of existing projects that are suffering, not performing really well because of these low prices, and because they're curtailed during significant days of the month. They just are not able to dispatch. So we're looking for, as a bank, we're looking for projects in the right location and with the low equipment costs so they can be as competitive as possible. The project size, I'll skip timing for a minute, but the project size is also important. I think it's difficult for many banks to do financings for particular project finance financings for relatively small projects. And projects under the PMGD framework, which I know a number of developers have been looking at in Chile, are difficult to finance individually. I think the efficiencies just aren't there. The structures we've been using in the past, we've done merchant financing in Chile, but I think at this point it's just not going to be happening, or very, very little. It's difficult to justify merchant structures with the prices in the spot market and the very low leverage you would end up getting. The PPAs that you see in the market that are being awarded by CFE, no, it's not CFE, that's Mexico, CNE in Chile, they are bankable PPAs and have been bankable for a number of years. They are not take or pay, and so they're not ideal in all ways, but they are bankable PPAs. What I'm seeing today is sort of a bit of saturation for banks that are active in Chile with solar risk. And so they're sort of stopping and reevaluating and dealing with a lot of the projects that they have in their portfolios, which are not performing really well. And so even projects with PPAs, I've been hearing at least delays in getting financing, or it's just become more challenging than you would think it would be, because in theory, a PPA project in Chile, should be a no-brainer, but it's not that easy. And some of these smaller projects are getting financed if they're packaged together. So then moving on to Brazil, which is sort of in a different stage of its development totally, the main drivers that we're looking at are political and regulatory risk. And obviously we're a multilateral development bank. We'll probably take a different view on that than a lot of other banks. But a number of the projects that we've seen have been awarded PPAs under auctions in previous years. And so one of the first questions you ask is, how realistic were the underlying assumptions, following a devaluation, given the changes in the prices of solar equipment? What are we looking at in terms of how realistic are the prices? The financial plan, this is the big question that all the developers seem to be asking in Brazil. Should they try to pursue BNDES financing, or should they go the other route and look for commercial bank or multilateral or some alternative form of financing? And there's a lot of costs and benefits on each side. BNDES, it seems they've been financing something like 90 to 95% of all energy projects, long-term financing in Brazil in the recent past. And so there aren't a lot of banks that have been doing business in Brazil for long-term lending. And so it's a shift in the market, and banks are coming in, including multilaterals like ourselves, and learning the market and trying to figure out what kind of products are necessary. BNDES has the advantage of being concessional in terms of its pricing, but you have to have the local content requirement met, and that involves getting panels supplied locally, and there's a very limited supply of panels in Brazil. And other banks can typically, take technology from China or from any other country, but the ability to fund in reais on a long-term basis is very limited. So banks will be looking at all of these factors, and also transmission risk. I keep writing transmission risk in all these countries because I wanted to point out that it's a common theme. This is an issue as well that we're looking at in Brazil. We, IIC, we're very, very active in Brazil right now. We really feel like there's a role that we can play. We're looking at different structures. One of them is a bridge financing structure where we are bridging lending that will come in from BNDES or from other long-term financing. And so that's something that we can offer. The long-term financing that comes in from BNDES can often be complemented by the second bullet point, which is infrastructure debentures, which is a way in Brazil that they're bringing local investors into the market. These debentures can provide long-term financing to projects. Their liquidity and success in the past has been a little bit questioned. I think we're coming in with a partial credit guarantee that we can offer a AAA guarantee to help improve the rating and the liquidity of these debentures and try to promote more institutional investor participation in these projects. And the third type of structure we're seeing is long-term financing from non-BNDES clients, I think non-BNDES banks. And basically we have that, IFC has that, some regional development banks in Brazil can offer that, but it's in short supply. And so that's the challenge where companies are facing, where if they want to source their technology and it would be cheaper from other countries, they're struggling to find banks that can offer long-term financing in reais. And it really makes sense in reais because the PPA is in reais and indexed to inflation. So the ideal loan is a long-term loan in reais indexed to IPCA, and that's what we can offer, but very few banks can offer that. And so that's a challenge in Brazil. Moving to Argentina, other challenges come to mind. It's a newer auction process, and so, but it's been very successful. We're seeing a lot of projects being awarded, and the types of banks that are coming are not commercial banks at this point. It's mostly multilaterals. the drivers are this political risk issue. So you're really looking for sponsors with a successful track record in Argentina as well as a long-term commitment to the project. It's not great to be a developer right now in Argentina who plans to, sell off your participation 30 days after completion. That's not very appealing to banks. An off-taker risk is there with Camesa, the mitigant being this fund that they've set up with the FORER, and certain banks are really looking at that as a mitigant. The PPA itself, we've taken a really long look at the PPA. There are a number of provisions that are really not consistent with international, project finance. The termination rights are quite unbalanced, I would say, in the favor of the off-taker. The ability to terminate, I think it's 180 days if there's a delay in the construction. And during operation, there are all kinds of scenarios where they can terminate. This really makes banks nervous. The allocation of transmission risk is a concern as well in Argentina, and how much of it is allocated to the project under the PPA. And the PPA also includes very high penalties for underproduction, much higher than what we've seen in other countries. And so you struggle to figure out how is the project going to make those payments in those scenarios. We're looking, we have an ability to lend in Argentina project finance structures. Not many banks do. We have a limited capacity. What's alternatively been done in terms of structures are corporate guaranteed loans, for mostly inside fence projects where companies are going to be using the energy themselves and they get a short-term financing to cover the cost or part of the cost of the project. And, but alternative to that, the project financing, we're basically doing it on a limited recourse basis, I would say, not fully non-recourse. There are certain guarantees that IIC is asking for sponsors to cover some of the risks that I talked about in the PPA that are very difficult to otherwise mitigate. We're looking at more reserve accounts than you would have for a project in Chile or in Mexico, just to be very transparent. However, there just really are not a lot of banks that are willing to come in. What we're really hoping to do is set a trend, create a structure that's replicable, make other banks feel confident to come into these structures. And then finally, I include Mexico. I better speed up here. Mexico, a little bit analogous to what we discussed with Chile. Very successful auction process. A lot of projects are out there in Mexico. It's been, it's a very aggressive banking market. So the PPAs with CFE or private off-takers are very, very bankable. The main issue, I think, in terms of the driving of the bankability is exposure to merchant risk. There's a relatively new spot market. It hasn't been tested. There's really no history. And so the merchant risk component, if a developer bids P75 and then wants to size debt at P50, the difference there is going to be sold in the spot market. And so the banks are looking at that. Can we give you credit for those revenues in terms of debt sizing? And then also the typical structure that we've seen is that we have a 15-year PPA from CFE, and they want an 18 to 20-year loan. And they're getting that. I think that's available in the market. And so that's something that can be, the aggressive and the availability of market of financing in Mexico is there. Mexican law is difficult for some banks. I just thought I would point that out. Long-term structures are there, and the merchant revenues, from what we've seen, banks are giving credit for these revenues in their debt sizing, but they're doing it at a higher debt service coverage ratio. So we think that's where the market is. Sometimes we've seen cash sweeps that are coming in to mitigate some of this merchant risk, and we've also seen a number of subordinated debt structures that are used to maximize leverage. So it feels like in Mexico there are a lot more options, a lot more flexibility, and so that's what we're seeing, a very competitive market. And Central America, I just included a few points there. Costa Rica, we don't see too much happening in the near future, but El Salvador and Honduras. In El Salvador, the recently awarded projects, we wanted to point out the PPA for those projects was based on an IDB negotiated PPA for a project that was financed following the first tender, so we feel comfortable with that PPA. The main limitation in El Salvador will be the fiscal situation of the country and the potential impact on subsidies. And then in Honduras, the previous auction process, the PPAs awarded were not awarded under an auction process. But they were done with a clarity in terms of the regulatory framework and significant fiscal incentives. And so those projects, from what we understand, are having a little bit of problems because of the transmission constraints in their location where they are currently. So it's difficult to justify more solar right now in Honduras without, you know, more base load to complement the solar or more investment in transmission. So that summarizes what's keeping us busy in the region right now in the area of solar, and happy to respond to any questions.
Thanks so much, Elizabeth. Very interesting overview of some of those key markets and some of those market drivers. You've discussed some of, I think, per market, some of the risks as well. So before we quickly get into discussion, I wanted to bring in one more poll question, and that's with regards. Again, we're talking about some of these sort of risk categories that exist within the region, and obviously we tried to sort of group these up. I mean, there's different ways to group these up. I basically just used the categories that that John sort of used in his earlier presentation. But we're basically sort of looking and trying to get, and again, I realize this is an unfair question, so before I get a lot of complaints from people saying, well, you know, it depends per market. I mean, again, we very much see this, and in your presentation, Elizabeth, you saw, you explained some of these per market, but I'm interested sort of generally to get a bit of a picture, and just to give you a bit of background as people are voting, we do have a very diverse attendee list in this webinar. So there's people from not just from throughout the Latin American and North American region, but there's a lot of European and Asian stakeholders as well. We're seeing a lot of just a mixture of developers and financiers and lots of others. So I think it's a, of course, this isn't to say that this is a truly representative poll, but it is interesting. I think it gives a bit of a sense of where people are focusing their worries, let's say, or trying to find solutions for. So we have, I'm going to close it now. We've had quite a lot of votes come in, and I'll share those results with you. So just to give an overview, I think Elizabeth, you won't be able to see this right now, but just to give you an overview, I gave the sort of the 5 different risk categories. We've got, a lot of people going for financing challenges. 59% of people are worried about financing challenges. 63% are worried about political and economic uncertainty. We've got about 34% worried about infrastructure challenges. A much smaller 8% for social and community issues, and 24% for regulatory barriers. So it seems that really the ones especially that stand out for the region tend to be sort of financing challenges and political and economic uncertainty. Per market you discuss these, but what are your, what's your, if you could sort of, and again, I know that's difficult, Elizabeth, but if you could sort of, from your perspective, what do you think are some of, for the region, the bigger sort of risk categories that needs to be looked at if you're serious about doing projects in the region?
You're asking me. I would say, for the main risk categories that we've seen that, is exposure to merchant risk and transmission problems. In certain countries there's a political and financial component, related to the government or the off-taker that will be a major concern. Those are the 3 categories that we seem to spend the most time discussing, and we can typically get more comfortable with, country risk than most banks, but the issue of transmission, I think, is something that affects every single country, and it's something that's not going to be resolved overnight, but it's really, once you see these projects in operation, it has an impact, and it's starting to, I think, give banks some concern. So you might have banks asking for more significant studies related to transmission, because they want to really assess that risk before getting into the project.
Thanks very much for your answer on that, Elizabeth. Now I'm gonna. So we've had quite a lot of questions come in throughout both of your presentations, and again, I encourage you to keep shooting those questions. We won't have time to cover all questions, obviously, but we will have these all on record, and we look to actually answer these in the entire process. So this is something that we will be ongoing, having several pieces of content for. But so so for Elizabeth, I have a question. I think this one's quite relevant for you. Let's say if I'm a developer and I want to get, sort of, if I'm looking for sources of financing I mean, what would you say are the best sources? I mean, again, I know that varies, and you gave examples of per market, but generally, what do you think? What would your advice be to a project developer who's right now looking for financing for a project in the region? What would be sort of some of the first stops that they could look at, explore?
Well, I mean, I think certainly local banks are from our perspective, doing a lot in some of these more developed regions. In Chile, in Mexico, in Peru, in Brazil, even you see these local banks stepping forward, and we may do 1 or 2 projects, and then they step in and do the rest, and that's the whole point of our participation. But to the extent that you can meet with local banks, I think that's very helpful. They know the markets better than anyone. They understand a lot of these issues, that you have that are particular to the country. In many cases, they can do, local currency if that's relevant, better than an international bank. And they can use local law in many cases, and that can be faster and cheaper. So, I mean, I think the local banks are a really good source. And of course, it depends on the country, but where you see these barriers to financing, I think multilaterals are a good option. We really, renewable energy is very, very important to us, and so there are, we're certainly going to take the call, because all of these projects, I think, are really interesting and relevant, and we want to hear about them and support them if there aren't other sources of financing.
Okay, great. So maybe directly you're one of the sources, basically, as well, for some of these.
I have to say that. Exactly.
Yeah, of course. No, indeed. No, but indeed, that's also one of the reasons from our end why we're always so happy to work with IAC. Obviously, you're very active in the region, and indeed, we see that, increasingly it does seem to become difficult. Another question, which is somewhat related, which I'd like to sort of shoot back to John, and also for both of you, Elizabeth, John, feel free to counter sort of each other's points if you have anything. But John, you sort of mentioned in your presentation earlier, you talked about sort of the rising cost of capital, and you also talked about the sort of lowering prices that we're seeing, and the sort of that race to the bottom, and obviously specifically with the utility scale segment. But it seems obviously that there's a bit of an issue there. I mean, if there's rising cost of capital, how can we sustainably sort of reach a situation in which, I mean, how much is the cost of capital going to keep, and then again, sources of funding, what are the best sources of funding right now, and how do you see things moving forward?
Maybe just to try to expand on and reiterate some of the points that I made. I think the main takeaway is that that model becomes less and less sustainable. And so as financing costs go up, as country credit risk goes up, and I mean, obviously, a lot of people agreed or see that country risk is an increasing concern, and you've got a number of cases from Mexico to Argentina, where inflation, the target was 25%, and it ran at 32%. So that's just raising kind of the risk profile, and Brazil continues to go through a massive recession, and that is creating a lot of complexity. So it's just hard to see from our perspective how those levels will be sustainable. And I think that what we were saying, what I was trying to convey is that corporate balance sheet funding will be a larger component, and the question is how much of the more robust PPA contracts that they've had, that a number of companies have had in place, particularly in places like Europe. How long can they kind of offset an increasing portfolio that is very, that has very razor-thin margins? So my major takeaway is that becomes pretty unsustainable. It's hard to see how technology benefits will continue to outstrip those other areas. And so there will be some kind of reckoning that takes place, and as a result, I think you'll end up seeing consolidation. You have just an incredibly large number of players, fighting over fewer and fewer attractive opportunities. I mean, the market's growing, but it's where those attractive opportunities are, may not be, and I think we've seen that played out in a lot of different markets.
Thanks, John. There's a lot of questions coming in. Obviously, I know that in the capacities that you're both in, sort of there is less of a focus, let's say, on the off-grid sector, but clearly there's a huge amount of interest. I mean, just to give you some background from our side, obviously we've seen, especially in Africa, where we organized our sort of first Unlocking Solar Capital conference, we see a huge focus on off-grid. We see a lot of interest from companies looking at opportunities for off-grid projects. Can any of you sort of comment on that? Are you seeing a lot of movement or opportunities in the off-grid segment in Latin America? Are there any specific opportunities that you're seeing?
Well, we've been looking a bit at sort of rooftop and off-grid type solutions in certain markets where it makes sense, and sort of more on a pilot basis, experimenting with some financial structures to try to finance these projects efficiently. We've done a couple of things in Mexico now, and looking also, through our financial institutions group to finance more like leasing structures and these types of structures for the rooftop installations. And we're having some success, but right now sort of on a smaller scale basis, but looking to increase that and see where we can add value in the financing of those projects.
I mean, if I could jump in there, I mean, the one market where I think there's just tremendous amounts of off-grid opportunity is Colombia, and the issue there is one that has been contingent on the peace process, and then a regulatory framework that will work in that area. I think the role of multilaterals is going to be incredibly critical. But there's what a lot of these off-grid areas are doing right now in Colombia is, I mean, they don't have 24/7 access to electricity. They use diesel as the source. It's incredibly expensive. I mean, it'd be a no-brainer to, in a number of these areas to bring in, solar and other renewable sources that can be incredibly competitive. There's vested interests that are at play, but I think, some of it is going to, be contingent on seeing kind of the, as the peace process kind of starts to now move forward and be implemented. What are the ways that the government and international communities are going to look to kind of stimulate activity? And, I think infrastructure, including energy, is, ground zero. So, hopefully, if not, we're going into an election cycle, so 2018, that we'll have presidential elections. The question is, will we see much activity before then? But if not, it absolutely will be front and center, and it'll be an area where they can generate a lot of activity and investment and all the things that the current Santos administration has been talking about trying to achieve.
Interesting. Thanks for both of your comments on that. And would you say, I mean, is it generally fair to say, I mean, and we will, for all of those of you that are joining our webinar, we do have a specific interest in the off-grid segment, especially, if you're talking about rural electrification, you're talking about sort of, off-grid structures with commercial industrial players. These are also areas that we will continue to really focus on in more depth in the coming months. But yeah, so just sort of generally just bringing that back, would you say, maybe a question for Elizabeth, typically, I think we see that a lot of banks, multilaterals such as yourselves, are in situations probably it's difficult in some cases probably to finance smaller scale projects. I mean, again, we'll go into more depth, but do you have any sort of advice at all for some of these smaller off-grid players that are looking to finance maybe some smaller scale projects? Are you aware of any initiatives, or is there any advice generally that you'd give now?
Well, I mean, this is something, truly that we do struggle with, is to how to best affect, to reach out to these smaller projects. And we can finance smaller projects. It just, becomes sort of inefficient, when you look at, because it tends to be the same amount of work and the same amount of legal costs and the same amount of, as a very large project. So what I think has worked well in a number of other places is either to, bring a bunch of projects together, if you have that, and try to finance them on a portfolio or some sort of programmatic basis, or to finance the first project, which can be a small project, with equity, and then, bring the second one in and leverage up that equity, with the second project, which could be bigger than the first project, or even the same size, but at least now you have more scale, you can get more attention from the bank, and perhaps, getting that, taking out some of that equity that you contributed to the first project. Those are structures that we've seen working. I mean, I would have to consult with my colleagues to see if we have any specific initiatives going on right now regarding off-grid. We probably do. I'm just not aware of it. If we do, in terms of like funds or anything available, I can let you know.
Perfect. No, and I don't mean to put you on the spot. I mean, this to me also highlights one of the things that I've seen, also especially in again, the pockets. It's not as developed, let's say, in Latin America as it's in some other regions, the off-grid segments, such as Africa. But what we do see is indeed that there's perhaps different streams of financing that are needed. And again, this is something that we really look to develop on in the coming months. So yeah, no, thanks so much for this. Maybe I think we are already just over the schedule, but there is one sort of last question which I know is on my mind and several others. John, you sort of started touching upon it, but maybe, yeah, the sort of globally feared Trump effect on renewable energy in Latin America specifically. I mean, you kind of touched upon it, John, but maybe for each of you, do you see the sort of Trump presidency and some of the, and of course a lot of it is guessing at this stage, as a lot of policies haven't been implemented, but generally, do you think that it might have a sort of positive outcome in that there could be a movement of developers and investors looking for opportunities outside of the U.S. and Latin America being close and sort of easier to work in some other areas that it could attract? Or do you think that that it might lead to a sort of slowdown in investments in renewable energy? Maybe start with Elizabeth. What are your thoughts on it?
Well, I mean, I think that if developers are not going to receive the subsidies that they need in the U.S., then they'll be more actively looking to push into other markets. So most of the countries that we work in, or many of them at least, don't have these large subsidies. They're looking at competitive auction processes, and you can bid what you bid, and so there can be tremendous benefits from these new markets, but they become competitive pretty quickly, and the better developers and sort of the lean and mean developers often are it's appealing to them. So I expect to see perhaps more focus. Certainly what we saw after the reduction in investment in Spain and in France and in Italy and Europe was just this huge influx of investors from those countries to Latin America, and that was a fantastic amount of investment that it went in, and so it wouldn't surprise me if we saw more U.S. Developers looking to other markets if the U.S. market is not favorable.
And do you concur? Thanks so much, Elizabeth. Do you concur, John? How do you see it?
Yeah, well, I think there's a few things to kind of keep in mind. I mean, the first is whether in fact federal subsidies will be eliminated. I mean, And so I think first point to make is that it seems pretty clear that subsidies as a general rule will look to be eliminated, but it's not so simple in the United States. States have a lot of autonomy, and there's going to be quite a bit of back and forth. It'll be interesting to see as well what individual states kind of do themselves to continue to promote renewables and clean energy mandates. I think the other item to keep in mind is then if in fact subsidies are eliminated, which I think to some extent as a general trend that they will be, will U.S. companies or participants in the U.S. market become equally aggressive? One of the arguments, and I've had this discussion with a number of lawyers that are incredibly active both in the U.S. and abroad, is that they might just move elsewhere. Yes, that's a possibility, but the same dynamics of what you had in countries like Mexico, where you had stranded assets, will be the case in the U.S. as well. And so the question is what will those companies look to do with those assets? Will they look to just kind of pull out and kind of lick their wounds, or will they look to double down and become more competitive? So I think in many respects, given the global dynamics that we've seen in these incredibly attractive prices, my view is that you'll start to see a much more kind of competitive market in the United States. At the same time, you may see some folks that look to other markets, and Latin America is certainly a logical market for a number of those companies. But if we also start to see auction processes take place in places like Spain and the rest of Europe, again, if you have all these kind of pressure points, it's something's going to have to give. So I think the main takeaway here, I've answered some directly, some indirectly, is that the markets are absolutely evolving, and there is a lot of uncertainty as to exactly what will happen. I also touched on the point of COP commitments and the pulling out of that. I think that there'll be a moment of pause if that in fact does happen. But the market and kind of movement towards clean energy, I think, is well in place. So it's kind of going to be a reassessment and then relook at how to move forward in light of that environment. But the reality is that renewables are here to stay, and it's just going to be kind of a readjustment, reset button to figure out, companies are going to make an assessment of whether they want to be in the U.S. or whether they want to be elsewhere. The trade aspect and imports, as I talked about, I think they factor in very significantly, and we'll have to wait and see exactly what happens in terms of, NAFTA, in terms of other, trade agreements that might have an impact on company decisions of where they're going to invest.
Thanks so much, Sean. And Elizabeth, no, there are really some really interesting points, and well, let's hope that your positive outlook is indeed, yeah, I agree. I mean, I think that renewable energy sort of, the movement is sort of unstoppable. I mean, we see it just makes a lot of economic sense in a lot of different locations, and how it plays out in Latin America. I'm hopeful that, Elizabeth, you're right in saying that, this could lead to a big influx if indeed the American market slows out, but indeed these investors are going to be looking for a return somewhere. So no, really interesting. Thank you so much. As I mentioned, we will be sort of releasing a lot more content in the coming months with regards to the Latin American market. And our first upcoming event, as I mentioned also earlier, is El Futuro Solar Argentina. I know quite some of you were asking in the webinar specific questions about Argentina. feel free to check out the website. There's a lot of content specifically on the Argentinian market, and I would encourage you to join us in Buenos Aires at the end of March and find out what's going on in the market. There's a lot of great opportunities, and indeed, especially I think Elizabeth, you highlighted some of the challenges that we now face, and sort of with the first sort of round of Renovar 1 being completed and projects now looking to be financed, it'll be interesting to explore and see how things develop. So Argentina definitely an interesting market, and Latin America more generally, we're very excited. So thanks once again to both of our speakers, John and Elizabeth, for joining us today. It was really insightful. We will be sharing the recordings and slides of this webinar with all of you. So you'll receive those in your email within the next few days. By the end of the week, for sure, you'll have that in your inbox. And we look forward to meeting you either in Buenos Aires or Miami or any of our other relevant events. And again, happy to get in touch with you if you have any questions. And my contact details are in the slide as well. And also, if you have further questions for either John or Elizabeth, we'd be happy to forward those for you and carry on these discussions. But again, so thank you to our speakers, thank you to our attendees and everyone who joined, and look forward to being in touch soon. And very, very bullish about Latin America. So looking forward to how things develop in the coming months. Thanks again.
Thank you.
Thank you.